Let's bring in Brian Hoops of Midwest Market Solutions. So overall, the overnight trade really turned on a dime when you got to, what, about midnight or so, or early morning, I guess. What was it that caused that turn? Any idea?
Hey, good morning, Marlon. Yeah, we got to the morning hours. We were kind of steady after lower overnight trade. Then we started to recover and rebound into the higher prices we saw by the close. Now, the export sales numbers that you mentioned really are not going to help us out and really probably won't hurt us much either. Old crop soybean sales, that's a net reduction. The 4 out of the last 5 weeks, we've seen net reductions. And it does put into question the USDA export forecast. They may not make a lot of adjustments in next week's supply and demand report. If they do, they lower the export profile just a little bit, increase carry in for the new crop soybeans, but they may do something in September because this is an ongoing issue and our marketing year ends at the end of this month. Corn sales really uninspiring, wheat sales uninspiring, nothing to get excited about. It's back to weather and what that direction is going to give us. Western Corn Belt this week is seeing a lot of crop stress. There's been some pop-up showers in certain areas, but overall, this crop is really showing a lot of signs of stress, and that is going to show up on our crop progress numbers. Eventually, it'll show up in the USDA numbers as well. But so far, rains in the Eastern Belt have kind of been enough, at least in the market's mind anyway, to compensate for the losses that we're seeing in that Western Belt. So right now, the forecast turning a little bit drier, giving us a little bit of a reason to rally. There's also some bargain hunting and commercial end user buying as we get down into some support areas, particularly the gap that was left after last week. That's where the buying interest is coming in both corn and in soybean.
I did want to point out on my evening radio show on Sirius XM last night, it's called Commodity Wrap. It was on at 5:30 Eastern Time. I was speaking with a gentleman from central Indiana, and they were talking about how they did get some fairly heavy rain over the weekend and over the past maybe week or week and a half. And he had spoken with a local farmer there about that, wondered how the crop was looking. He thought it looked great. He walked out there in the field and he said, unfortunately, it pollinated when it was so hot. And there just was a real disappointing pollination result this year. And so he said there's no way to add to that now because all the kernels aren't there. So just something to think about. We'll come back in just a moment here, Brian, and we'll take a look at this livestock sector as well here on a Thursday when we come back. Well, we also, beside the grain weekly export sales numbers, we also get the meat-related export sales numbers here on a Thursday morning, and that represents the sales of beef and also on the pork. Here is what we sold this past week, according to USDA. On the beef side, 12,200 tons. That was down 52% from the previous week. And let's look at the pork sales, 31,000 tons there. That was up 43% from the previous week. Did we have China in there buying any of that? They did not buy any U.S. beef last week. They were buyers of U.S. pork, at least last week anyway, and they bought 16,800 tons. So let's go back to Brian Hoops and talk about this. Maybe a disappointing number on the beef side, Brian. Pork side, pretty strong number, but that was before the Pelosi trip.
Exactly. It'll be interesting to see what they come out with next week as far as their exports, if they continue to be a buyer. They did show up as a good buyer of pork this week anyway. Mexico was a decent buyer of beef. China really not much buying much beef. And the beef sales were really disappointing, I thought. The pork sales pretty much in line with what we've been doing each and every week. So they're strong. They're not a surprise or anything. So I think it'll continue to see our trend of looking at what the cash markets are doing. And the cutouts were down big last night. We may get a little bit of a weakness on the opening bell from those lower cutouts, but the cattle trade looks to be stronger this week in the cash markets. Options expire tomorrow, first notice day on Monday. That kind of combines to see, I think, higher prices here in the near term for this cattle market. Now, maybe feeders find a little bit of selling pressure because of higher corn prices, but corn's only a couple cents higher. If that selling pressure develops, it's probably going to come as a result of corn increasing if it does during the trading session.
Well, on the last couple trading days here on the October live cattle, we actually made new highs for the move, correct?
Yeah, exactly. It's a strong market here. You look at the October contract that you have up on the screen. I think since May the 4th or May the 5th, this is the highest close that we've had for that October future. So it's a strong. It's like a breakout on the charts. We're getting back to near these old highs in both live cattle and feeders, which should represent to producers an area to lock in some put options and get yourself a price floor established in case things soften up. You want to buy these options when you don't need them. And right now, it doesn't look like you need them because prices are moving higher. That's the perfect time to establish some risk management.
Right. October closed $1.82 higher on the live cattle yesterday. We had the feeders settling on September at 182.90. That was up $1.45. And on the lean hogs yesterday, well, we finished up the day with October down 37 at 95.85. Can't wait to see what happens this morning. Thanks, Brian, for the help. Appreciate it. Brian Hoops, Midwest Market Solutions. So, Suzanne, we're ready to kick this thing off.